Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. This is Market Today, a show where we'll help you understand the closing action on the D Street to help you navigate through the last half an hour of trade. We will also be joined by a very special guest. But first up, a quick check on how the markets are doing at this point in time. Right from the word go, there was a hint of volatility on the expiry trading session, and of course the monthly expiry happening on the leap year day. That's a rarity. You do see the Nifty hovering about 0.1% lower in trade right now, 21,920 for that one. The Nifty Bank absolutely flat as flat can be, 45,937 currently for the Nifty Bank. Let's look at the mid and the small caps, where a lot of carnage really happened over the last two trading sessions. There seems to be a pickup happening from the lower levels. Both the mid cap and the small cap 100 index are now up, inching towards the day's high point. You can see a 0.1% move on the upside, despite all the volatility that we saw across the trading session today. 48,151 for the mid cap 100 index. The small cap slightly better, about 0.3% of a trade. That's at the high point of the day for sure. Some of the sectors have also recovered in trade today. So the metals are shining bright, 0.7% of a move. You also have the PSU banks that are moving up sharply, 0.7% now. Then you have the FMCG, private banks, consumer durables and financial services, slight upticks coming in on this one. On the Nifty, you do have stocks like Adani Enterprises, Tata Consumer Products, IndusInd Bank, Britannia, also M&M and Adani Ports kind of stocks that are doing well. On the downside, you have Bajaj Auto, ex buyback, that's lower in trade, about 3.3%. Apollo Hospitals, LTI Mindtree, Eicher Motors, slightly down in trade right now. Let's welcome our guest on the show. Sharad Avasthi joins in. He's the head of research at SMIFS. Sharad, first help us understand what is the sense that you have about the markets. We've been seeing last few trading sessions, in fact last week, 10 days or so, a greater amount of consolidation, sideways kind of a move really taking place. Our markets are up one day, the next day they are down in trade. What do you think is causing this volatility? Is it the absence of any kind of triggers with major events now on the back of us right here? How do you really advise investors to navigate through this kind of a volatile move?
Yeah, I think as you rightly summed it up, there is an absence of triggers at the international level, at the domestic level. Last 3-4 months, we had a lot of activity regarding the budget here, then the state elections, and then the markets rallied very smartly in the last 2 months of the last calendar year. So all that compounded into it. The interest rate dilly-dally was also there. We were earlier expecting a faster interest rate, lower interest rate environment. Now it has been delayed by some time. So I think market is still grappling with that issue that whether inflation in the developed world will peak out sooner and maybe we will have a lower interest rate trajectory. Add to that some nervousness regarding the valuation of mid-cap, small-cap stocks. At some places, the froth is there, the valuations are a bit absurd. So I think all combined, there is a bit of perception that maybe there is a possibility that the markets could correct, and that nervousness further bolstered by SEBI's decision to look into small-cap, mid-cap rallies. Yeah. I think that has caused some nervousness. So broadly, I would say, see 200, 500 points or even 1,000-point cut on the Nifty at these numbers, one should not be very perturbed if you are a long-term investor. Short-term traders will obviously keep an eye on various levels according to the drop. For them, 200, 300 points or beyond, most probably the momentum would change either ways. But in terms of long-term investing, I think I would not be perturbed by 1,000, 2,000 point fall. I think elections are more or less a given, though internationally there could be some upheavals that we keep hearing about, but that's typical election year behavior. You listen a lot of speculations about what may happen, what may not happen. But on balance, I think maybe we would remain a bit volatile till the elections or even after the elections for a month or two. But broadly, we should end the year at a much higher level.
Okay, so this is perhaps, volatility that may play out up until elections and a little while after that as well. Specifically on the mid and the small caps that you mentioned, that has been a bigger drag over the last few trading sessions, and there has been a cause as well. SEBI came out with a very clear note to AMFI talking about the risks there. It has asked AMFI and the mutual fund companies to start looking at ways of protecting investors' interests, because the flows from the retail category keep coming unabated into these mid and the small cap space as well. I was speaking to Dharmesh Kumar Dhirendra Kumar a little while earlier, and he did mention how in the last 5 years investors' money in small cap specifically has grown by 1.5 times each year in the last 5 years. That's the kind of rally that we have seen. So some warning coming in. How do you really look at that? Could this really lead to a sharper amount of correction that we really have not seen, and that may seem warranted after such overheating?
Yeah, I think you could see some correction, but whether it's a sharp enough correction or not, I think for small cap, mid caps, 10-15% drawdowns are not such a big no-no. They can happen at a very fast pace. And I think you will have buyers at the lower level, because I believe the retail investor has finally woken up to the fact that alpha generation can only happen out of the small cap, mid cap space. The only problem could be that most of the investors are still following the return only parameter, and they are not looking at risk adjusted returns. And I think the metrics are also not very easily available for a risk adjusted return kind of parameter to the investor. So that is a challenge that they have. But I think the type of risk you are taking in terms of buying an off the board small cap, mid cap stock on the basis of any hearsay kind of information, that is a problem. I don't think the mutual fund, AIF, or the PMS side would have so much of a problem, because they would largely be, the larger ones specifically, would largely be doing it through proper research and proper understanding. So I don't think a lot of problems would come out of that. But yeah, sentiment wise, I think short term there could be some more correction that the small cap, mid cap see after a decent bounce back from these 5-10 days correction. But long term, yeah, maybe for the next 3 to 4 months, the small cap, mid cap rally, the across the board rally where you could buy anything and make money, might be absent at least till post elections.
Okay, so how would you be looking at deploying any fresh funds? Is that becoming an increasing challenge as of now? We've actually seen sectoral rotation really play out. More or less, most of the sectors have seen their, dream runs also take place. How would you really, look at deploying fresh funds? Is it the time to increase the cash component, wait for some opportune time, or do you still feel there are enough and more opportunities and pockets of value that can be deployed into?
No, see, I think largely the pockets of value are available on the contra side of the bet. The plain sides, I don't think you have much of an option, and you have to dig deeper within a sector to get those opportunities in place. And as you rightly pointed out, within the larger space, I think most of the companies, whether you talk about autos, oil and gas, most of the PSUs, they might be priced to perfection, leaving very little scope for improvement from these valuations over the next 1.5 year. So I think, yes, finding new ideas from the large cap space is a bit of a challenge. But if you take some contra views or some views where a re-rating is possible, you could look at some companies like within the IT space. I think LTIM could be an idea that you could look at. I'm very bullish on that. I think the merger synergies will play out over a period of time.
Okay.
The contra bet, you could be looking at the chemical names on the front line. You could be looking at the UPL, PI Industries. Within the media space or the entertainment space, I think PVR could be a good alternate bet long term. And a safer bet on the large caps, I think ITC does offer a decent level at these prices. That's a good bet to play on. So there are pockets, but I think a generic call on sectors or on a space would be difficult to take from here on from current valuations. So you have to dig deeper, look for opportunities where stocks have corrected because of a reason or something. And maybe the long-term perspective is very much intact. Maybe it gets delayed by 3 to 6 months. That is easily possible. But beyond that, your returns should be good enough to substantiate that waiting time.
Fair enough. So LTI Mindtree, UPL, PI Industries, PVR, Inox, ITC as pockets where investors can continue to look for value. in this kind of a market, generics sector kind of investment, rather than that go for specific stock opportunities where the stock may have actually consolidated over some period of time and now may offer some value. And we will continue to discuss more stocks with you as well. Let's talk about the news of the day that was seeing reactions, and that is the Reliance Disney merger come through. How would you really look at Reliance Industries now? Of course, this news was awaited. Finally, it's now coming into shape. What does it mean for Reliance Industries, the shareholders, investors of Reliance? What does it mean for the entire rival media industry at large? Would it be a bigger dent for them? And how should one be really playing the media space now?
Yeah, so across the board, I think the Z Sony fallout was a big fallout. We did not expect that to happen, but it's not happened as we expected. And since that date, I think most of the speculations were that most probably the valuation of the deal would be substantially lower vis-a-vis what we were estimating earlier. And now I think gradually the numbers that we see are very much reasonable numbers, and it should be a win-win situation for both the companies as they infuse new funds and rake up the performance. I think it will be a win-win for Jio as well because the media giant that they create with the OTT presence that they have now, they should be in a very strong position to funnel more combined deals for the Jio users as well as the FTTH users. I think those two will be very good growth areas for the company. FTTH, I was anyways very bullish for Jio. I think with the combination of Jio Cinemas and sorry, Disney Hotstar, everything coming under one roof, that could be a very big positive for most of FTTH subscribers who get a bundled offer from Jio. That should result in higher ARPUs for them as well. Similarly, I think the telecom part of the business should also gain out of it. And these two businesses have now become substantial out of the total SOTP valuation. And if they can drive up ARPUs, I think that should be a substantial value addition. We'll need to hear what the company has to say. I think most of the synergies will need around 6-7 months of time to stabilize, and the management coming out and clearly stating out what is the forward objective. Currently, we are working with a target of somewhere around 3,100, 3,150 on the stock. I think that should be achievable. But I think in terms of this deal, most of it probably has been priced in, because if you look at the run-up since the Z Sony fallout, I think the market largely anticipated this pretty easily.
Okay, fair enough. Let me just mark for all our viewers, there is a big spike coming in on the PSU banks. That's where all the investors are really rushing into. Union Bank of India 5% higher now, Bank of Maharashtra 3% up, Central Bank of India, UCO Bank, Canara Bank, IOB, SBI State Bank, that is PNB, Bank of Baroda, all of them up and about in trade. All of the constituents now up into the green, and the index is now 1.5% higher in trade. There is a move coming in just the last few minutes, if you see, for a large part of these PSU banks as of now. Of course, remember today for SBI, there was a raise in target price coming into 850 rupees as well from one of the brokerage houses as well. And this is from Kotak Institutional Equities that we had seen. What do you really have to say on the PSU banking story? Sharad, we have seen, most of these stocks really see some bit of re-rating take place already. But do you see it is now too late for somebody to enter at these levels, or do you still believe that if someone has a long-term horizon, still a good enough time for investing in these?
To call a top on these stocks is a very challenging task nowadays. But yes, I think most of these stocks are properly taking into account. Sorry. So I think most of these stocks are taking into account most of the positives that they can deliver over a shorter period of time. And even if you look at SBI, I think now it is taking into account median valuations that it has got over a period of time. The next leg of rally for these banks can come out of further re-rating happening to the price to book multiples, which could be the story that, the difference between a PSU and private bank multiple should narrow down. If that is the story, I think you could expect some more upside. But as a conservative investor, I think PE re-rating is something that I would assume to happen very rarely, while the PE oscillation between the lower and higher points or the median points is a more regular event. So I would consider that these valuations are more or less fair value for most of the PSU banks. Uh, if I were to take a call, I think even at current prices, maybe SBI does offer some upside, but we were working with targets of 750, 775. It's roughly there. So can't see much of an upside. But on the private sector, I think HDFC Bank and Kotak could be very good bets. The type of transformation that they're doing within the banks, that should yield very good results over the next, 2 or 3 quarters also. So I would be more bullish on those two banks rather than bet on the PSUs at this point in time, because they might have to prove a lot of credit worthiness in terms of the credit cost as well as in terms of advances growth. And so I think that will take some time, and then the PE re-rate, price to book re-rating might happen for most of these banks. But I think the first leg of re-rating is strong enough, and I don't see much re-rating happening from into these banks over the next 6 to 9 months. So I'd be more bullish on, say, the private sector banks like a Kotak or an HDFC rather than bet on, the PSU banks. And even within the PSU banks, if I have to bet on something, I think SBI remains the only bet because of so many subsidiaries that could unlock value. But otherwise, I think generically across the board, I would rather use this bounce back to exit most of the PSU banks.
Okay, so private banks versus the PSU banks, right there. There is some bit of flashes that are coming about, and that's with respect to the cabinet meet outcome. And on remember the solar subsidy scheme that the Prime Minister had talked about, and then the Finance Minister had reiterated in the budget as well, where about 75,000 odd crore rupees an outlay has now been approved as a subsidy which is going to be given by Government of India for rooftop solar schemes for 1 crore households. That has got a cabinet approval right there. So let's just discuss the solar space for a bit. Sharad, your own take of, of course, the country is focusing on the renewable energy goals, and within that, the solar space really got that fillip when the Prime Minister and the Finance Minister did talk about it. The cabinet really moving in fast on this one, and the entire power space is looking positive now. So you do have stocks like, of course, NTPC, Power Grid, they are moving up in trade. You have REC, PFC and the like that are also moving up. NHPC is moving up. This entire space was in the limelight for a large part of the last 1 year as well. How would you look at a fresh with this cabinet approval coming through? Is this still a hot space to be in?
Yeah, I think long term it could be a hot space to be in, but NTPC and the likes, this is not the sole business that they are into.
Yeah.
The other business is also there. And I don't think that business has opportunities to upgrade in terms of valuation or numbers. So it'll be a gradually growing business, but this is a very strong profile business that can grow up for REC PFC. I think most of, again, very decimal valuations to median valuations. The stocks have gone up 4 times, and I think still they are not very expensive, but I would call them fairly valued at these prices. And I think if you are expecting a 15% kind of annualized return over the next 5-6 years, and the companies grow 15-16% per annum, which they should easily do, I think REC PFC do make decent bets if you are happy with the 15% kind of growth, or don't expect 4x kind of returns that you've already had. So I think REC PFC expect 15% kind of growth. Even Power Grid after this run up, I think there should be a lot of demand for the grid infrastructure because of renewable push. And the solar push should also require your reverse grid capabilities. That should also enable more investment into T&D. So that should help most of the T&D companies, Power Grid being the solo player or the largest player. I think they should benefit more. But at these valuations, I don't think it leaves you much scope. So you get a dip in stories like Power Grid, REC, PFC. If you want more alpha to be generated, I think these could be good stories to bet on. Tata Power also, I think after this announcement has gone up substantially. Sterling Wilson Solar long term, I'm very bullish. I think that's a story you can look at, but it has very little to do with the retail side of the solar story. It's largely large EPC projects. So I think Tata Power is a good story. Similarly, could be a Vari Energy, could be a good beneficiary out of this.
And Sterling Wilson is up by 5% odd amidst this news flow again. Any specific solar bets do you have in your mind that you track more actively rather than these diverse players specifically?
SW Solar is something that I've been bullish on for quite some time now. I think in between there have been a lot of events. The type of projects that they have in place, the storage projects, one Nigeria project is a big project that as and when materializes, it should substantially give a substantial fillip to the numbers. There is some guarantee that was to be issued by the erstwhile promoters. That will also play out, I think, over the next 1 or 2 quarters. The number should be substantially better, though historical numbers might not look that promising because the company had been into losses and all that. But if you look at the larger plan of most of these companies, or like the NTPCs and the GAILs of the world, I think the type of renewable energy growth that they have, specifically on the solar side of it, SW Solar should benefit a lot out of that. Add to that the international exposure coming from Australia, as well as this Nigerian project, which is a battery storage project as and when it comes up. I think that could be a very big project as and when it converts. And plus, they have some receivables in place because of the guarantees issued by the earlier promoters. That should also substantially aid cash flows and bottom line. So I think Sterling Wilson is one name which I'm very bullish on. The other name could be Borosil Renewables, the solar manufacturer of solar panel glasses. I think they have also done a decent expansion at the abroad batteries, and that should aid a very healthy growth. Even if you consider some equity dilution by the company over the next, 3-4 years, I think still that should be something that could double your money. But both these companies do not have a very rosy past in terms of numbers. So, but though they have performed nicely, but it's been a bit of topsy-turvy turn for them. But I think the type of opportunity that the space offers, these two companies should benefit substantially out of it.
Okay, fair enough then. So that's as far as the entire renewable space, solar space is concerned, and the opportunities that you can scout for over there. Let's look at the F&O space, and let's look at some of the stocks that are really buzzing in trade. Berger Paints has caught my attention. It's now 10% higher in trade as of now. When we look at the current price, it's at 614 odd levels. A very strong move coming in on Berger Paints. And if we look at the share price performance historically, you will find that in the last 6 months, or there has been very flattish kind of a move. In the last 1 month, in fact, in the last 5 days is where the move has come in about 8% odd or so. Last 1 year, again, just a 27% of an uptick is what we have seen. Of course, but the stock is coming back in momentum. How do you really see these paint stocks, Sharad, currently? Asian Paints, Berger Paints and the like. Anything in the move that you look at deeply?
Akzo Nobel is one story we are looking at. I think they have a lot of coating exposure, which is used on renewable power, wind turbines, etc. I think that is one company which could benefit, and it is largely on the industrial side. Most probably it will receive very little competition there. Though it's a thinly traded stock, so I think, but in terms of valuation, that is where we see maximum comfort. Asian Paints, people would say that even after so much correction, you don't find valuations attractive, but it's still a bit stretched. Same for Berger. I think these stories were a bit stretched over the last 1.5 year, trading at 70, 80, 90 times forward. And I think this correction or time correction largely, and some bit of price correction, is largely putting valuations back into the pocket where they should be. These are excellent companies. The Grasim overhang is obviously there. I think though there is a bit of overreaction regarding that, but even after that, I think buying these stories at 50 times to 55 times 1 year forward, I think they are still a bit stretched. So if I had to buy one stock, I think Akzo Nobel India still looks decent in terms of valuation. There I see much better upside vis-a-vis the frontline names like Berger Paints or an Asian Paints.
Okay, Akzo Nobel, that's the stock that you will be looking at. So that's as far as the paint industry is concerned. Let's also discuss with you the auto space, since that will be in focus tomorrow. We will be getting the monthly sales data. Bajaj Auto has turned XPI back. That's the one that's showing some dips today, 3.5% odd. Rest of the stocks still doing much better. But how would you assess the move in the entire auto space currently? Of course, it's the auto ancillaries that are actually getting more attention these days vis-a-vis the main OEM players. How do you look at the entire auto story playing out right now?
I think it's played out wonderfully over the last 1.5 year, from a space where most of these stocks were largely a no-no or a total dismal proposition. consider the likes of a Bajaj Auto or a Hero MotoCorp. I think the returns have been stupendous over the last 1.5 year. But at these valuations, I think even for a Tata Motor or these, I think most of these stories are properly discounting what they would do over the next 12 to 18 months or even more in some cases. So I can't really find valuation comfort in most of these stories, barring probably an Ashok Leyland, which is a trigger in terms of the electric bus orders that they get, the reorganization that they have done, focusing on new parts of the country's geography. So maybe Ashok Leyland for targets, of around 200 plus might be a good idea to look at amongst the OEMs. And regarding auto ancillaries, yeah, you rightly mentioned. I also think the auto ancillary space, since it's a wider basket, does offer opportunities to pick stocks within. What we have recently looked at, I think Craftsman Automation looks like a good bet to have. Samvardhana Motherson is something that I've been recommending. I think 140, 145 could be the fair value for the stock. And at that, it would be more or less trading at median valuations. So Samvardhana Motherson amongst the auto ancillaries, larger players. And if you're looking at a mid-size to smaller player, I think Craftsman Automation could benefit out of the value that we are seeing and with the new product lines and everything that they're putting in. So Craftsman Automation could be another bet that you could look at.
Okay, so Craftsman Automation, that's the second vote of confidence coming in on this stock after we had seen Mr. G. Chokalingam really give his vote on this stock, and now you have Sharad Avasthi also talking about value being seen on this stock, and Samvardhan has been one of the top favorites from the auto ancillary space from most of the analysts who've been coming in. So in the morning you had Soni Patnaik talking about it, yesterday you had Ruchit Jain. Most of the analysts are betting big on Samvardhan, both technically and fundamentally. Now you have a vote of confidence for this one right now. Meanwhile, the Nifty is back above the 22,000 mark, and that's a bit of a breather as we inch closer. We're just 3 minutes away from the day's close, and you actually see a spike coming in onto the Nifty in just the last few minutes. 103 point of an uptick is what you really see on the Nifty right now. And so let's see which are the stocks that are giving in some of their contribution. Reliance Industries, clearly, that's a major contributor. You also have ICICI Bank as another major contributor, L&T, SBI, M&M, IndusInd Bank, Titan and Infosys. These are some of the major contributors on the move in the markets that you are seeing over the last few minutes or so. So we are back above the 22,050 mark right now as far as the Nifty is concerned. We have spoken about ICICI, we have spoken about the private banks, we've spoken about Reliance Industries, SBI, we have discussed the auto space also, we have discussed at large as well, the PSU banks, we've discussed the power space as well, and these are some of the pockets that are showing in some kind of a momentum. Last word from you, Sharad, before we end the session. What would your advice be to all the investors who've been sitting on good amount of profits right now and for preparing for the next leg where you believe there could be some more heightened volatility that one should be prepared for?
So yeah, I think if you're sitting on profits and the valuations are a bit stretched, in some pockets you could do some shifting out of those companies into the contra bets, stocks that have not at all moved and valuations are very attractive. And the probability is that over the next 6 to 7 months, most probably the broader numbers across these companies show some improvement. So I think that is the strategy you keep. Sector rotations will happen. I think similarly, you need to look at autos, PSU banks, shift out of them and maybe shift into some of the private sector bank names that we have spoken about. Within the contra bets, you could look at chemicals as a good contra bet to play on, specifically agrichem. I think you have some large names there. You could play that. Some fertilizer names could also feature amongst that list. I think most of them have corrected. Chambal maybe for targets of around 450.
Okay, so IT, chemicals, fertilizers, some of these stocks from these pockets can actually offer you some good amount of profits going forward from here. So shifting of profits from one place to another is a wiser strategy in the times to go ahead right now. Many thanks, Sharad, for being with us on to this special edition. Always a pleasure to host you on Business Today TV. So we are ending now with a spike, which is good. 82 points higher on the Nifty, 22,034 can be seen. as the last tick. The Nifty Bank closing 300 points higher. So that's where you've actually seen most of the contribution really come in over the last few minutes, and within that it's ICICI Bank that's really contributed to this spike. So the Nifty Bank is above 46,266 levels at this point in time. 0.84% of an uptick. You can actually see a recovery from a very low point, a sudden spike, and that's really led to this spike in the markets. What else has moved up today? From the Nifty, you have Adani Enterprises 2.5% higher, Adani Ports that's moved up 2% up in trade, IndusInd Bank, Britannia, Tata Consumer Products, Maruti M&M, SBI, Asian Paints as the stock that's moved up. In the F&O space, Berger Paints was clearly in the limelight, 10% higher in trade right now. Some more breaking news coming in as far as the semiconductor mission is concerned. For India, a giant leap. Cabinet has approved 3 more semiconductor units as well. So that's something that you should be tracking in tomorrow's trading session. Tata is going to be setting up semiconductor assembly in Assam as well. So look at the Tata Group companies that may be in focus as well. So those are the particular stocks, and semiconductor as a space is something that you should watch out for. Pulled up sharply towards the end of the session, ending 1.8% higher as the top sectoral mover in trade. Metals 1.4% higher, again moved up very smartly in trade. The broader markets, sharp recovery from the lows, 1% higher for the small caps, 0.8% uptake for the mid caps. Nifty Bank, private banks, financial services, they all pulled up towards the last half an hour of trade. Oil and gas, consumer durables, FMCG, auto also recovered from the lows as well. Barring the IT, which was flat, healthcare, which was 0.5% down, and the media index that was largely played down by Z Entertainment shares. Those were the pockets that were declining, but a smart recovery is what you have seen in the markets really play out. With that, we wrap up this special edition, but do stay tuned on to Business Today TV to catch all the updates that are important for you to track as a stock market investor. Many thanks for joining in.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.